A very good morning from Khandwala Securities Limited and welcome to Tuesday's trading action at Dalal Street dated March 8, 2022. The trading theme of the day revolves around two big catalysts. First, exit polls which predicts a clear majority for BJP in Uttar Pradesh. Second, Russia-Ukraine war. Well, the exit poll trend suggests BJP to retain power in 4 states while Aam Aadmi Party to sweep in Punjab. The final results of the 5 state elections will be announced on 10th March. But the biggest worry for our stock market is the two big risks from Russia-Ukraine war, raging inflation and increased recession. In yesterday's trade, the Indian rupee fell 84 paise to an all-time low of 77.01 against US dollar. Blame it to escalating tensions between Russia and Ukraine, which have kept crude oil prices at an elevated level and heightened worries about domestic inflation and wider credit deficits. The street will keenly watch on how RBI tackles with a backdrop of higher oil and commodity prices and, most importantly, growth-supporting fiscal policies. Now, before we get into details, here is the preferred trade on Nifty and Bank Nifty. Nifty current market price 15,863. Sell between 16,000 to 16,100 zone. Stick stop at 16,559. Targets 15,711 and then at 15,501. Aggressive targets at 14,251 zone. Bank Nifty current market price 32,871. Sell between 33,500 to 33,750. Strict stop at 35,557. Targets at 31,901 and then at 30,405. Aggressive targets at 29,687 zone. Outlook for Tuesday, Dalal Street enters danger zone. The big question, when will the war halt? Well, Russia continues to aggressively penetrate into Ukraine and as per latest media reports, the war is seen as the biggest tragedy for the Ukrainian people and also bigger threat to the future of Europe and the world at large. We suspect the only one country that might have the power to stop the war now is China. At the moment, China is staying neutral, but as per reports, the crisis in Ukraine is drawing renewed attention as China is cautioning the US supporting Taiwan and trying to build a Pacific version of NATO to the status of Asian island. Technically speaking, Nifty's biggest supports are placed at 15,711 mark. Below Nifty 15,711 zone, expect waterfall of selling which could take Nifty down to 14,251 mark with intermonth perspective. From a chartist standpoint, the technical landscape will improve considerably only if Nifty closes above 16,557 mark. The options data for March series suggests Nifty is likely to be in a trading range of 15,500 to 16,500 zone. Maximum call open interest at 17,000 followed by 16,500 strike price. So the 16,500 mark would be Nifty's crucial resistance zone. Maximum put open interest stands at 16,000 levels followed by 16,500 levels. Call writing was seen at 16,000 and then at 15,800 strike price, while there was meaningful put writing at 15,200 and then at 15,800 strike price. Bank Nifty's maximum call open interest at 38,000 strike price while maximum put open interest at 30,000 strike price. Our chart of the day is bullish on stocks like Vedanta, National Aluminium and Hindalco with an interweek perspective on any corrective declines, while we continue to remain bearish on stocks like PVR, Bajaj Finance, Bajaj Finserv, Siemens, IndusInd Bank, RBL Bank. That's all we have for now. For any queries, do contact us at 022 4076 7373 and do visit our website www.kslindia.com. Thank you and have a profitable day. Please note that the stocks mentioned in this podcast are only for educational purpose. Our company or any of its employees shall not be held responsible for any investment or trading action undertaken by any person based on the stocks mentioned in this podcast.